Just because your church has insurance doesn't mean you're actually protected. And that sounds a little extreme, I know. But I want you to think about this for a second. Most church leaders I talk to feel pretty good about their insurance. The policy's in place, the premiums are paid, and on paper, everything looks covered. But here's the problem. You don't actually find out how good your coverage is when you buy the policy. You find out when you have a claim. And when that moment comes, when something major happens like a fire, a storm, or a total loss, you don't get to go back and fix what was missing. You're stuck with whatever decisions were made ahead of time. And I've seen churches walk into that moment thinking they were fully protected, only to realize they were missing critical pieces that completely changed what they got back. So the goal of this video is simple. Make sure that if something does happen, you're not finding out the hard way that your coverage wasn't what you thought it was. In this video, I'll show you the 4 layers of church property protection that most policies miss, how insurance companies actually determine what your building is worth, and the costly mistakes that leave churches underinsured even when they think they're covered. Now imagine this for a second. There's a fire in your church. You walk back into the building weeks later, and instead of what you had before, you're looking at something that technically functions, but doesn't look anything like it used to. The details are gone, the character's gone, the materials are different, corners were cut, and you're standing there trying to make sense of it. When the insurance company says, we paid exactly what the policy said we would. And that's the moment most church leaders realize they didn't have the coverage they thought they did. Here's the reality. Church property protection isn't just one thing, it's layered. And if even one of those layers is weak or missing, the whole thing starts to break down when you actually need it. That's why when I review church policies, I'm not just asking, do you have insurance? I'm asking, do you have the right protection in the right places? Because there are 4 specific layers that every church needs to get right. And if you understand these 4 layers, you'll be able to quickly see where your gaps are and fix them before they become a problem. Building coverage. This is where I see some of the biggest and most expensive mistakes happen. Because when it comes to your building, there isn't just one way it can be insured. There are actually 3 different ways your policy might be valuing it. You've got replacement cost, actual cash value, and functional replacement cost. Now, on the surface, those might all sound pretty similar, but they produce very different outcomes when you have a claim. Replacement cost means if something happens, the insurance company is going to rebuild your building the way it was with like kind and quality materials. Actual cash value takes depreciation into account. So you're getting less than what it costs to rebuild, and you're expected to make up the difference. And then there's functional replacement cost, which is where things can really go sideways. Because functional replacement says, we're going to rebuild this building so that it functions the same, but not necessarily looks the same. And let me give you a real example. I was walking through a church one time with a leadership team, and their broker was recommending they consider functional replacement cost. And as we're talking, I'm looking around the sanctuary. Beautiful space, detailed woodwork, stained glass all over the building. And I looked up at one of the stained glass panels and I paused for a second. And I asked the leader and I said, let me ask you something. If you had a fire and the insurance company came back and said, we're going to replace that with standard plate glass, how would you feel about that? And he kind of looked around the room, looked back up at the window and said, yeah, that wouldn't work. This place would look terrible. And that's exactly the problem, because on paper, functional replacement can look like a cost-saving option. But in reality, if your building has character, stained glass, custom features, anything unique, you're not getting your building back. You're getting a version of it that just checks a box. So the key takeaway here is simple. You don't just want a building that works. You want your building back. Now let's talk about everything inside the building, because this is another area where churches are consistently underinsured and most don't realize it until it's too late. Think about everything that exists inside your church: your chairs, tables, sound equipment, TVs, computers, office furniture, supplies. These are the day-to-day items that keep the church running. But here's where it gets more nuanced. Some of the most valuable items in a church, like pews, pipe organs, stained glass, or other unique features, are often not treated as simple contents. Depending on the policy, they may need to be properly included in the building value or specifically scheduled to make sure they're covered correctly. And this is where mistakes happen. I've seen policies where those types of items were either undervalued or carved out and placed somewhere else in the policy in a way that made coverage more expensive or worse, incomplete. Now, on top of that, there's another issue. Most churches set their contents limit once and they never revisit it. Or they estimate it without ever really thinking through what it would cost to replace everything. And here's where this becomes a real problem. After a major loss, the insurance company is going to ask you to document what you had, not in general terms, but specifically. How many items, what kind of equipment, what was the value? And if you don't have a clear record of that, it becomes very difficult to prove what you lost. I've seen situations where churches had to sit down after a loss and try to remember everything that was inside the building. And you can imagine how hard that is. So the takeaway here is simple. Make sure your everyday contents are properly valued and documented. And just as importantly, make sure your unique and higher value items are covered in the right place within your policy. Because if those two things aren't done right, when you're going to feel it when you have a claim. Now, this next layer is one of the biggest gaps I see, especially with older church buildings. And the reason is simple. Most policies are designed to rebuild what you had, not what the law requires today. Here's what I mean. Let's say your building suffers a major loss. You might be thinking, okay, insurance is going to come in and rebuild this thing exactly the way it was. But that's not actually how it works. Because the moment you start rebuilding, you're no longer operating under the rules from when your building was originally built. You're operating under today's building codes, and those codes can require things like updated electrical systems, ADA compliance, sprinkler systems, or even tearing down parts of the structure that weren't damaged just to bring everything up to current standards. And here's the problem. Those additional costs are often not included in your standard building coverage. So you could have a situation where insurance pays to repair the damage, but all of the required upgrades come out of your pocket. And for older buildings, that number can get big, fast. So the takeaway here is this. You're not just insuring the building you have, you're insuring what it would take to rebuild that building under today's rules. And if your policy doesn't account for that, there's a gap sitting there waiting to show up at claim time. Now, this last layer is the one that determines whether your church can actually function after a loss. Because even if the building is covered, that doesn't mean your operations are. And this is where business interruption coverage comes in. At a high level, this is designed to replace lost income and help cover ongoing expenses if your church can't operate because of a covered loss. But here's where a lot of churches misunderstand it. There's this assumption that if something happens, people will just keep giving. And in reality, what tends to happen is this. In week one, donations drop off hard. Services are disrupted, routines are broken, and people are just trying to figure out what's going on. Now, over time, some of that giving may come back, but there's a gap. And during that gap, you still have expenses, staff, programs, ongoing obligations that don't just stop because the building is unusable. And if there's no business interruption coverage in place, or if it's misunderstood, you're left trying to bridge that gap on your own. Now, one important thing to understand here is that this coverage is typically triggered by a covered loss. So it's not going to respond to every situation, but when it does apply, it can be the difference between staying stable or scrambling to keep things going. So the takeaway here is this. Your building might be insured, but if your income isn't protected, you're still exposed. Now, let's talk about how insurance companies actually come up with the number they're using to insure your building, because this part gets misunderstood all the time. Insurance companies aren't guessing. They're using a formula. They're looking at things like your square footage, the type of construction, the year it was built, how the space is used, and any unique features like stained glass or custom elements. And from that, they generate an estimated cost to rebuild your building. But here's where churches run into trouble. A lot of times, the number they're using for their building is based on something completely different. It might be what they paid for the property or what they think it's worth on the market. or even what it was insured for years ago that just hasn't been updated. But none of those numbers reflect what it would actually cost to rebuild the building today. And I've seen what happens when that gap shows up. There was a church that had a loss, and when everything was said and done, the amount they had insured was not enough to rebuild what they had. And the result was they had to build something smaller. Not because they wanted to, because that's what the coverage allowed. So the takeaway here is simple. What it costs to buy your building is not the same as what it costs to rebuild it. And if those two numbers aren't aligned, you're carrying more risk than you can think. So when you step back and look at all of this together, you start to see the problem. Because it's not usually one big mistake that causes a problem. It's a series of smaller gaps across these different layers. Maybe the building value is off. Maybe the contents are too low. Maybe there's no ordinance and law coverage, or business interruption wasn't fully understood. Individually, each of those might not seem like a big deal, but when something actually happens, they stack. And that's when churches find themselves in a situation where the policy responds, but not in the way they expected. And that's the key point. You don't find these problems when you buy the policy. You find them when you use it. So just having insurance in place isn't the goal. The goal is making sure the structure of that coverage actually holds up when you need it. Now at this point, you might be wondering, where do most churches actually go wrong with this? And the reality is, I see the same patterns over and over again. Buildings that are simply underinsured, contents limits that haven't been updated in years, in some cases buildings that aren't even scheduled properly on the policy, especially with multi-building campuses. I've seen situations where things like precious metals weren't covered correctly, or stained glass was pulled out of the building limit and scheduled separately in a way that made it more expensive and sometimes less effective. And none of these are edge cases. These are common. They happen because policies get set up once, and when they just roll over year after year without anyone really digging in to see if they still make sense. So the takeaway here is this. If you haven't taken a close look at how your policy is structured recently, there's a good chance there are gaps sitting there that you just haven't discovered yet. So the question becomes, how do you actually fix this? Because once you start uncovering these gaps, the next step isn't just to go out and buy more insurance. It's to understand how to evaluate your options the right way so you can make a confident decision about what to keep and what to change and what actually matters. And that's exactly what I break down in this next video. I'll walk you through how to compare coverage options side by side, what to look for beyond just price, and how to choose a policy that actually lines up with how your church operates. So if you want to make sure you're not just covered but protected, click right here to watch how to compare coverage options and choose confidently. Thank you so much for watching. I'm Daryl Henry with Bitner Henry Insurance Group, an American church group of North Carolina and Minnesota, and we serve those who serve others.